Now, if I keep 1 minute as the time frame, so every 1 minute there will be one candle which will be made. Now you will think that what are you talking about? What 1 minute candle? So see, there is something called OHLC, open, high, low, close. Okay. Now, if my time frame is 1 minute, and you know that in the stock markets, trading happens almost in microseconds. Thousands of shares, they exchange hands in 1 microseconds across the market. So during the 1 minute period, which is a huge time frame, by the way, 1 minute is also big, it's not small, huh? During a 1 minute time, a stock's high was, let's say, 220. Its lowest price was 219. Okay. And during that minute, by the way, it opened at 219.50. And by the way, it closed at 219.75. This is closed, this is open, this is low, and this is high. Now, please understand what would have happened during that day. During that minute, the stock would have opened at 219.50. It would have gone down, let's say, all the way to 219. And meanwhile, someone started buying. The stock went all the way up to 220, finally closed at 219.75 in that 1 minute. Next 1 minute, what will be the open? Next 1 minute, another OHLC, what will be the open? The close of last minute will be the open of this minute. Do you agree? Yes. Next 1 minute, if I have a price data, this is called price data. Okay. If you add volume to this, which means in that 1 minute, how many shares were traded? That's called price and volume data, which is basically V. You add V also to it. Right now, I'm not focusing on that. So the stock closed at 219.75 in that 1 minute. Next minute, what will be the open? The open will obviously be the same as the close of previous candle, right? Previous price data. And then there will be a high, the low, and the close. This close again will become the open of the next 1 minute. So every minute you are having an OHLC price data. If your time frame is 1 minute, okay? And remember, in every time frame, the open of any time frame is the close of the previous time frame, except daily candles or daily time frame. Now, in a daily time frame, which means 1 day time frame, what will happen? In a 1 day time frame, you will have one OHLC for 1 day, which means during 9:15 to 3:30, where what was the highest point of the day of that stock and what was the lowest point. At 9:15, what was the price at which first trade happened? At 3:30, what was the point at which the last trade happened? Now, when the market closes on this day, next candle will form not on the same day, but the next day, isn't it? Next candle will form on the next day. So next day, can it be that the stock does not open exactly at the same price where it closed last day, but it opens gap up, right? It can possibly happen. Or it opens gap down. The first open price, the first trade which happens at 9:15 can be very high compared to the close of the previous day, and it can be very low also. Thereby, you will have gaps in the candles, which means if it is a daily time frame, not 1 minute, 5 minute, 1 week, if it is a daily time frame, see what happened. This was one of the open, high, low, and close of this day. This was, let's say, 19th August. And this represents a gap down. Can you see? This gap has been created in the candlestick pattern because it was a daily data. This is basically 20th August, let's say. So please understand, every gap it is considered in technical analysis will be filled eventually. This is a success mantra in technical analysis, I'm telling you. There's something called gap theory, which says that every gap in technical analysis, if there is a gap which has been created, sooner or later the gap will be filled up. And rightly so. If you can see it here, properly, this gap has actually been filled up. See, this was a gap created, this was a gap here, right? If you can see that. Now this gap which has been created here, it has been filled up between this and this candle, which means if there was a candle here and a candle was here and there was no candles in between, there will be a time when the candles, some candles will appear in this zone of the price. Okay, it means that the y-axis which we have, y-axis, the vertical axis, not the horizontal, that is actually the price. Yes, sir, it is the price. But wait. The y-axis is not represented on the left side, it is represented on the right side. So the y-axis is actually the price of that stock. So it cannot start from zero, obviously. So let's say the stock was around 70 rupees here. Next day, this is a daily candle. So next day it was between 70, 80, 90, 100. This is how your price scale happens. Okay, this is the price scale. So if the stock missed this zone between 100 to 110, let's say, it will recapture this zone. This gap will naturally be filled one day or the other. Before filling that gap, maybe the stock goes all the way to 200 also, who knows? But one day it will come back to its zone. Any gap created in any stock, generally it is believed in technical analysis that it will be filled up. Generally. Okay. So on the right side, we have the vertical y-axis. Okay. And the gap has to fill as a technical belief. Okay. It's an assumption. So that we cannot challenge that. It is a belief that if there is a gap which has been created in a stock, 70 to 80% of the time that gap is generally filled up. Okay.